Welcome to Insight Private Wealth's quarterly market update. I'm here again with Dr. Steve Garth. Steve, it's a grey, miserable day outside at the moment, but we've had a look at the investment market returns. Markets seem to be really strong at the moment. Everything seems to be up. Everyone's making lots of money. How has the Australian share market gone over the last quarter?
Yeah, Sam, the Australian share market is actually booming along. It's really all blue skies out there for financial markets. The Aussie market, it's up 5.3 for the quarter and a sensational 14.4% over the year. And you can see that's on the back of those strong returns as well we saw at the end of last year. The market just seems to keep going up and up and up.
Yeah, fantastic. But is it all sectors that have actually been booming, or is it sort of concentrated in a couple of the sectors?
That's a really good question, Sam. I think, as most people know, Australia is really dominated by financials, and the resource sector, the mining companies, makes up more than 50% of the market. Financials are booming. You can see they're up 12% for the quarter and 28% for the last 12 months. But the resource sector, and this is BHP and Rio, they're down by minus 6.2% for the quarter. So why are resources sector so bad? It's got to do with iron ore, or a lot of it's got to do with iron ore.
Yep.
That's down 20% in the quarter. And that's because Chinese demand for our iron ore has just evaporated. Their property construction sector has just been in a hole for a little while, and there's no sign of it recovering. And those property developers were the biggest importers of Australia's iron ore. So not as strong a return as we could have got, but that's the problem in a concentrated market.
Yeah, that's right. No, it wasn't that long ago that the situation was actually reversed, where the resources sector, the BHPs and Rios of this world were doing exceptionally well, and the banks were doing quite poorly. So things have now flipped the other way, and it sort of it rings. When we speak about those diversified portfolios, this perfectly illustrates it.
Does.
How about the international shares, Steve?
Yeah, well, speaking about diversified portfolios, this is why you have international shares in portfolios. Look at the returns here, up 13.9% for the quarter. Now, that's led to a large extent by the US. In the past, or in last year, it was really the high-tech sectors that was just booming, and everyone's heard about the magnificent sector and the AI sector. They're still doing well, but this time, this quarter, the rally is much more broad-based. Other stocks besides the AI stocks are also doing well. And on top of that, other countries are doing really well. Europe's doing really well. And Japan has actually got a higher return than the US in the quarter. So all the developed markets are absolutely booming.
Yeah, so international shares are outstripping the Australian shares. And again, speaks volumes in terms of maintaining those diversified portfolios. So, Steve, it's been a fantastic quarter, both for Australian and international shares, despite the grey day and the blue skies at the moment in terms of investment returns. What do you see in terms of the forecast?
Well, that's right about the blue skies for the markets, Sam. Unemployment's low. Growth in companies is good. Economic growth is good. No one's talking about a recession anymore. It's going to be what they call a soft landing, or even a no landing, where economy continues to grow. So there are no obvious risks out there. But of course, Sam, these are exactly the times when it's the risks that you don't see coming can unsettle markets. So we know markets are volatile. We know that this won't continue forever. But there's no obvious risks out there at this point.
Yeah, look, at the returns are really, really strong at the moment. Clearly not sustainable as part of the long-term expectations. But so long as we're maintaining those diversified portfolios and managing that risk, I think that's the key message through this.
Exactly right, Sam. Yeah.
Thanks very much, Steve, and thanks very much to everyone at home. And we look forward to catching up with you next time.